Hi, everybody, and welcome to tonight's event of Chicago Booth Angels London pitch event. My name is Cornell, and I'm part of the Chicago Booth Angels London. We will spend 1 hour together, and we have a very, very packed agenda tonight. First of all, I'm very happy to have Waverly Deutsch as our featured speaker. Professor Deutsch will provide us with a sneak peek into her research on the signals that investors take from pitch events, which is quite apropos because after Waverly's talk, we will have 5 pitches in the areas of financial infrastructure, or the robotic process automation and chemistry, payments, and enterprise software in applicable to renewable energy. Very exciting startups. And at the beginning, I'll start with a very short 5-minute introduction about Chicago Booth Angels and just basically what we have been up to over the last year, which have been quite a few exciting events. A couple of housekeeping rules. The event is 1 hour, and in the interest of time, we're not going to have any Q&A for entrepreneurs. We'll be circulating a survey within the next 2 days from 24 hours, whereby we will aggregate all the interest in the companies and any questions you might have. And as well, we'll be offering syndication opportunities, or at least facilitating syndication for the people that would like to proceed towards an investment. Tonight's event is recorded. I think you might have seen that, so to keep that in mind. All right, with that, I shall get going. So, we had established the London chapter in 2013, and over the last 7 years, Chicago Booth Angels in London have made 4.3 million of investments into 30 startups, and we've had 3 exits. Our whole purpose in life is to facilitate the connection between entrepreneurs and people who provide capital and expertise, and there are quite a few of them at University of Chicago and overall the ecosystem around us. We have seen an increasing interest in our activity, and over time our investments have flown into a number of areas. This year alone, we've seen the most active year. We've had investments in the areas of deep technology, enterprise software, and healthcare. The 3 deals that we've done, notable deals, 2 of them are follow-ons from the prior years. The checks are bigger, and we're taking a more prominent role in helping entrepreneurs move forward to the next rounds. They would be qualified as late seed. AMFG, or Autonomous Manufacturing, is a company that we've invested in first time in 2017, and this time around we led the deal instead of a venture capital firm. And our angels have a board seat, and we take business advisory roles and work closely with the entrepreneur. Graken is a very exciting deep technology company that has tremendous potential. It's in the very exciting area of knowledge graph database and engineering, and providing software engineering suite for software development. We participated in 2 tranches, the first one in 2019 and one in this year. And the last one, which is the Origin Sciences, is our first deal in life sciences. It's quite exciting. It took us quite a bit to wrap our heads around it. And the company is undertaking, utilizing DNA sequencing analysis for diagnosis of colorectal cancer to start with, but it's applicable to a couple of others. So these are very exciting opportunities. We look forward to seeing them into the next years. The opportunities that we get, 30 investments, for every single investment that we make, we see north of 50 companies. And they do come from our network. The deal is qualified, and we have nurtured relationships with a lot of venture organizations, venture capital firms, incubators and accelerators across London and the broader European entrepreneurship community. And you see some of them on this page. We also have a very close relationship with Chicago Booth. Obviously, we are part of the Chicago Booth. Take a lot of pride in that. And over the last 2 years, the Chicago Booth Angels has sprouted into a global organization. There are 8 chapters worldwide. Thank you very much to Penka, Jenny, Leanne, and the entire team that has supported us in this activity. And we look forward to growing even more with the upcoming years. The advantage of being global is that this provides entrepreneurs access to capital from other parts of the world, introductions if need be, and as a tight community, we're very happy to facilitate that. So if you are interested in getting in touch with us in pitching or in being part of the network, please get in touch with us. It's london@chicagoboothangels.com, and we'll make the introductions to the other chapters if appropriate. And with that, I'm going to move on to the key part of our event. I'd like to introduce Professor Waverly Deutsch, the academic director of the UChicago Global Entrepreneurs Network. Professor Deutsch has a long list of accolades. She's teaching a number of classes. She developed a few classes, and I was privileged to take them while I was at Booth. She's also an active angel investor and also an advisor to a venture capital firm in Chicago. So without further ado, Waverly, over to you. You are on mute, by the way. Yeah, well, good.
Thank you. I'm going to ask you, yeah, so now I will begin sharing my screen. I see many familiar names on this webinar today, and I'm really so impressed with what Cornell told us about the accomplishments of the CBAN network. So well done, folks. We are so proud of what our Chicago Booth alumni are doing in the Chicago Booth Angels Network and the UChicago Global Entrepreneurs Network, which is really designed to support our alumni entrepreneurs throughout their entire careers. What I'm going to talk about today, I think, is going to surprise many of you, and it has some interesting implications, but Cornell misled you a little bit. It's not my personal research. So what I do when I write articles for the Chicago Booth Review, which I do on almost a quarterly basis, is I do some of my own research, but what I really do is I look for fascinating, relevant academic research that's happening in the world at large and bring it to practitioners in a way that it's impactful and they can understand. So what I'm actually going to be showing you is more of a point of view, what will be a point of view article on some really, really great research on a question that I think all entrepreneurs are desperate to know the answer to, and that is, what do early stage investors really look for in making their investment decisions? If you were to Google, what do investors look for, virtually every VC out there has some form of a blog post or an article that says, hey, this is what we look for. You better have these things in your pitch deck. We want to see a unique solution to a big problem with, multiple customer segments in a large and growing market that has some competitive differentiation and a demonstrated go-to-market process with a good economic model backed by a really solid management team. And if you look at any of those blog posts, what are we looking for? These things come up. Is that really what they look for? Well, Professor Steve Kaplan did a deep survey of 885 venture capitalists worldwide at 681 firms and asked them what was most important in their investment decision process. He was able to sort those responses to feature early stage investors, because early stage investors, the stage that we're dealing with Chicago Booth Angels here at this pitch event, early stage investors have the least amount of what we would consider to be concrete historical data in order to predict performance. So at the PE level, you've got, years, if not decades, of performance data, you've got intellectual capital, you've got customers you can interview, right? At the seed stage, at the very early stage, you have far less of those, what we would consider to be hard economic signals. So what do the VCs really look at? So the data I'm going to show you here is what the early stage VCs in Professor Kaplan's survey said. They were asked to pick their top 3 major criteria for investment. So if you look at the top 3 criteria, you'll see that team ranks first, but it's closely followed by the business model, which is the economics. How do you actually generate positive capital returns? And the product itself, closely followed by in a good sized market. Above and beyond anything else, the 5th answer was the fit with their portfolio. Does it actually match with their investment goals and what they do? So it looks like fairly evenly ranked is the market, the product, and the team. But if you actually ask them for the most important characteristic that they consider, the team shines 53% over every other criteria that they mentioned as the #1 element that venture capitalists consider when choosing their seed stage investments. Think about it. The team is the thing that we have the most data on at that very early stage. So it makes sense, right? And research has shown that the startup team really is an important factor in entrepreneurial success. So academic studies have correlated a team's previous experience with entrepreneurial success, particularly experience in the industry that the company is operating in, and former entrepreneurial experience. In addition to experience, since this is a Chicago booth event, I will tell you that having an education from a top-tier university also correlates with entrepreneurial success. Other things about the team that correlate with entrepreneurial success: the passion, the resilience, how excited they are about their venture, and committed to it. Recent research, brand new research, shows that pure hard work, how much effort, time, sweat equity they're pouring into their venture, actually can mitigate some of the lack of experience when it comes to predicting the success of an entrepreneurial team. So early stage investors are right to heavily weight their evaluation of the team. But do they do a real evaluation of the team, or just get a sense of it? And this is what's going to blow your mind. So a brand new working paper by 2 of Professor Kaplan's former PhD students who are now at the Yale School of Management. I got an early look at it. Steve passed it on to me. And they decided to use early stage investing, an area where there is great information asymmetry and lots of unknowns and risks. They decided to use that as a way to test new technologies that can analyze non-content-based signals. So they said, let's get application videos for the top 5 accelerators, since those are publicly available on YouTube, and randomly sample those and look for different kinds of cues that investors might be responding to. They found 1,139 videos for applications to places like Y Combinator, Techstars, AngelPad, top 5 accelerators. And they pulled these off the internet without asking the accelerators for them. So it was random data. And it was random data that they could then use to determine, were those teams selected for the accelerator? And they could track them for success later in their careers. Did they get investment later by looking at things like PitchBook and Crunchbase? Then they did some incredibly sophisticated, it blew my mind, incredibly sophisticated work with AI. They used models that have been now accepted in the AI and machine learning world for parsing out visual cues that we give. They looked for visual cues that were positive, things like happiness, smiles, and visual cues that were negative, things like expressions of anger, sadness, fear, and disgust. Separated those from when teams were showing positive versus negative versus neutral emotions with their faces. They looked for vocal clues, including happy sounding voices, sad sounding voices, warmth in the content, using words like excitement and happy to be here, or ability, using words like competence or expertise, words that were specific to the business. And they looked at verbal dimensions. What content words did you use that indicated momentum, positive energy? What content words did you use that indicated risk or downside? How much content could be found in the industry-specific language you used? Just all kinds of analytical frameworks that have been validated in many, many studies, and that we now have the technology to pull out of these videos. So they looked at these videos, and of the teams that they looked at, 8.5% of them got spots in the accelerator. 8.5%. So just to have my numbers right, that was 97 of the companies they looked at were selected for the accelerator that they were applying to. They were also able to take those companies, all 1,139 of them, and see who got investment. In other words, who was successful, who had employment later. And they found 248 companies that got investment rounds. Obviously, the 97 that got investment rounds from the accelerator, but additional companies that were not accepted for the accelerators that were successful. And then they measured their levels of success on employment and fundraising rounds. Okay, so 8.5% were selected for the accelerators. The number one predictor of being accepted for the accelerator was not traction, was not having an MVP, was not team experience. It was happiness. It was enthusiasm. It was positive expression. For each standard deviation of time that the team presented where these positive clues of happiness, enthusiasm, warmth, friendliness, for each standard deviation, the chances of being accepted to the accelerator went up. And if you showed that positiveness across all three dimensions, each standard deviation led to a 35% increase in the chance that you would be selected to the accelerator. The negative side, being serious, showing competence instead of warmth, visual clues of anger or fear, vocal clues of concern or risk. These things took your chances down of being accepted for the accelerator. Now, these are short videos, 3 to 5 minutes. The average was a little over 3 minutes. How quickly did the investors make up their mind? When they coded just the first 5 seconds of the video, it looked exactly like the results. It predicted whether or not you would be selected for the accelerator the same way as the coding of the whole video. No statistical difference there at all. Investors make up their minds in the first 5 seconds based on whether you're smiling and warm and happy. That's a really scary thought, isn't it? Now, maybe there's something in positivity that correlates with success. They checked that. And the answer is no. In fact, what they said, and I'm going to read the quotes directly, quote, none of the positivity pitch features positively links to long-term performance of the startup. And, quote, in fact, many of them are negatively associated with startup performance. They ran the study controlling for the things that we said were important about a team, education and experience, and those things did not change the results. So what are the implications of this? Well, first of all, for you entrepreneurs, you now have a way to game the system. If investors are making up their minds that quickly when talking about you, you've got to smile. You've got to express enthusiasm in the first 5 seconds of your pitch. Now, I've been coaching the New Venture Challenge for 20 years. And after every first round, I said, people, you got to smile. Do you like your business? And now I have real solid, academically, statistically valid data that I have been giving good advice for years. Women, this is a dual-edged sword for you. So this is going to come as a terrible, terrible recommendation. One, if you are on a women-only, a female-only team, warmth and positivity are even more important, and negative and neutrality, negative signs and neutral signs are penalized even more for you. But if you're on a mixed gendered team, the investors are paying attention to your male colleague. And if you show too much enthusiasm, it's a distraction. So you have to play second fiddle if your male colleague is presenting. I hate to have to give you that advice, but we know that there is bias in venture investment. We've done a lot of research on that, and this article will touch on that as well. But that's the advice I have to give you if you want to get funding. Now, we've got a lot of investors on this call, so try to control your first impression impulse. Other research that I'll touch on in the article indicates that when investors are contacted from AngelList with deals that AngelList thinks that will interest them, they pay a lot of attention to the team data when choosing which companies to get more information on. Try to get something in writing about the company and particularly about the team before you make your first impression by meeting them on a Zoom or watching them on a video. Consciously in your evaluation, try to overweight content versus that first impression. Really look at team expertise, which we talked about correlates with success, and really look at traction, which correlates with hard work. So those are two elements that AngelList includes in what they send out to investors. Investors pay attention to the team. They don't always pay attention to traction when they're choosing what investments to look at. So I know you're pretty excited to see my article this winter. I'm pretty excited to finish writing it. And I hope this is really useful for you guys today in doing your presentations. Thanks for having me.
Professor Deutsch, thank you for sharing this unique and very insightful research with us. We would now like to switch to our presentations, and we will be starting with absolute collateral. Stephen, over to you.
No sound, sorry.
Steve, sorry, no sound. Can you please start over? And while we're waiting for Stephen, just Again, thank you very much, Waverly, for the insights. Just a note. This is why we at Chicago Booth Angels take quite often months to go through the DD. And Stephen is a perfect example because we've been speaking to him since April and still speaking to him about this stuff. So it's not always the case. Sometimes we make the investment decisions within 2-3 weeks, but it's quite often that we would go way beyond that. Steve, whenever you're ready, you're on.
You're on mute. We still cannot hear you.
I'll tell you what. Shall we maybe go to CheMastery? And Steve, maybe you can do that afterwards. Anna, would you be ready to take over?
Yeah, I'm definitely ready.
Perfect. Okay, Stephen, if you don't mind, we'll change the sequence.
The inevitability of tech difficulties whenever it's really important.
Well, thank you very much, everyone. I'm very excited to be here and very excited to talk to you about CheMastery.
Hello, everyone. I'm Anna, and I'm here to introduce CheMastery, where we are building the infrastructure for chemistry. We are doing this because science is unscientific. The biggest problems for chemistry today are reproducibility and cost-time efficiency. This means that a chemist cannot simply follow a recipe and obtain the desired compound in the wanted yield and purity. This wastes up to 80% of the 202 billion euros world chemical R&D market, meaning a waste of money, a waste of time, a waste of science, and a waste of manpower. It's a complex problem with many aspects contributing, such as lack of standards, human error, and differences in skill and training. To make things worse, the current solution is to manually repeat the reaction 10 to 20 times until the chemist rediscovers the recipe. The chemical industry is essentially doing R&D on R&D. Our scientific resource is not efficient, and CheMastery is here to change that. We are automating the work that is currently done manually in a research or manufacture chemical laboratory by providing a full stack software hardware solution. The chemist starts with a recipe that they created or one from the literature. They input it in our software, which standardizes it by checking for errors and missing information, creating a CheMastery protocol. This protocol can then be executed by our hardware, which can synthesize and purify almost any organic molecule. So in the end, you get a verified chemical and a verified recipe, which you can reuse anywhere in the world, anytime. Our solution saves months of R&D work because the outcome is certain and the work is automated. We also provide the user with reaction data, which can be used to tackle other big industry problems, such as manufacture scale-up. Robotic automation, or Industry 4.0, is the next big trend. Our solution decentralizes the chemical supply chain and also provides a reliable manufacturing on-demand solution, a problem that has become even greater during the COVID crisis. We envision a future where digital recipes are sent around the world and chemicals don't have to cross borders. Our robot is modular, as you can see in the picture. Each box has a different chemical capability. We're specifically targeting the organic medicinal chemistry market first, but our product is universal. We work with our pilots to calculate the value of our solution based on their own business numbers, and we expect it to 3x their revenue and 5x their profit. Under our robot as a service business model, the customer can choose the capability they need and change it if their chemistry changes, a feature that is not available in the market. It provides CheMastery a recurring revenue stream with a 90% profit margin. Over the 7 to 10 year lifetime, each robot is expected to bring a 2.5 million profit and amortize its costs within a 2-month contract. The chemical market is huge, with chemical sales at 3.4 trillion, R&D at 202 billion, with a compound annual growth at 8.4%. In the UK, there are 550 chemical manufacturers with an annual turnover over 5 million, of which 67% CRMVP as an unfulfilled need, providing CheMastery with 121 million recurring revenue in the UK alone at a 13% market share. For the top 35 farmers, every month of R&D saved by CheMastery creates a $17 billion market per month. We have validated the problem and solution with over 160 chemists. CheMastery also has 3 commercial pilots signed and 16 in the waiting list, as well as testimonials from Sony and others. We are the best team for this because my co-founder Stefan and I have literally done this before. We've previously built an automation solution that was published in Science. We've actually been working together for 5 years, always collating chemistry with engineering projects, and we were both part of a startup before. I have a PhD in chemistry from Cambridge, and I spent over 10 years in chemistry labs, so I understand the customer. I've actually been the customer. Stefan has a PhD in material science from a Max Planck Institute and is an expert in chemical engineering of both software and hardware. We also have 2 very experienced advisors on board with a combined 80 years of experience in the chemical industry from both the technical and commercial side. We already received funding from Entrepreneur First, and we are part of the Hardware Club. We have a prototype of the software, and we're now raising $300K to build the hardware. With this round, we want to engage with our assigned pilots, showcase the product in a customer's environment, create PR examples, further customer relationships and interest. CheMastery will then raise a further $2.3 million to bring product to commercialization by the end of year 3. We're projecting $600K revenue in year 2 from 3 pre-sales from our pilots, $3 million in year 3 by selling to the 16 in our waiting list, which will bring CheMastery to profitability, $50 million in year 4, by which time there'll be a dedicated sales force of 4 based on selling 4 contracts per month per person. Now more than ever, we need our science to be efficient. So join us and help us make a difference. Thank you very much for listening.
Thank you very much.
Thank you very much. We will now move to Sennen. So Gabby, over to you.
Hello, everyone. Hopefully you can hear me.
We can, all good.
Yes, we can.
Great, thank you. Hi, my name is Gabby Amiel. I'm the CEO of Senon, and I'm really pleased to have the opportunity to share with you some information about the business and to invite you to participate in our growth. So Senon is a tech business focused on the renewables and clean infrastructure market and focused on the growing number of assets in that sector. So we are an asset management platform for renewable energy operators and investors. And our product consists of high performance dashboards, real-time data integrations and bespoke tools covering all aspects of client activity. So that means we're not just a monitoring system, we are more like an ERP system for our clients.
I think we're having some connectivity issues with Gabby. Let's give him a few more minutes to see if he can connect back.
In the meantime, should we move on to
Yes.
another company?
In that case, we shall move on to our next company. This is going to be Spatium, presented by Gary Yusifov. Gary, please go ahead.
Hello, everyone. I'm Gary. I'm CEO and co-founder of Spatium. I'm very excited to present our project to Chicago Book Angel Network tonight. So let me share my screen and go through my pitch. Okay, so Spatium is the new generation digital asset wallet designed for the use of the mainstream majority. One of the biggest obstacles for the mainstream adoption of digital assets is the dilemma of who takes responsibility for the custody of user funds. Currently, users are obliged to choose between two imperfect solutions, custodial and non-custodial. With non-custodial wallets, you become your own bank as you take responsibility for managing your funds, and private keys used for transaction signing. An ordinary customer isn't used to the fact that loss of credentials or devices would result in unrecoverable loss of funds. While with custodial options, the full control of the funds is transferred to centralized entities which are regularly exposed to all kinds of third-party risks, including cybercrime and data privacy. Spatium's idea was to provide security service by separating control over the funds from the responsibility for security. With our model, no one can access funds without the user approval, but security is guaranteed by a professional third party. Our hybrid architecture allows combining the benefits of custodial and non-custodial wallets. This is done through our proprietary multi-party computation protocol that replaces the private key with a set of independent secrets, hence removing the single point of failure. One secret is generated on user side, whereas the second confirmation secret is kept on the side of the third party. Both sides need to confirm the transaction to sign it. In case user loses access to his wallet, he can restore it through our unique anonymous biometric backup functionality based on neural network. Our product is available both for end customers and retail financial service providers like banks, brokers, or exchanges. You can register with just 3 simple clicks. You can trade, exchange any digital currency. You can get access to Web 3.0 decentralized applications and decentralized finance services from a single platform instead of using separate wallets for separate services. We are monetizing through B2C as well as B2B2C model. In the retail, it's a free version with the Spatium as default security provider, where we charge fees for exchange and purchasing selling operations. The premium version has an institutional-grade custodian as a security provider. For this unique feature, we're going to charge a monthly subscription fee. With white label B2B2C solution, we charge a small setup fee, and then we share revenues from users' transactions or charge an annual license fee. Our retail wallet is currently growing users organically at the rate of 27% month-over-month. We expect higher profitability from the retail side after we launch the subscription-based premium version in 2021. Our white label solution offers traditional financial institutions a regulatory-friendly bridge to the crypto world for diversifying their service range. It's easy to integrate, allows banks to retain their traditional functions in light of AML, KYC, and other internal requirements, with the benefit of not having to take responsibility for custody of digital assets. We are currently onboarding 2 clients, a commercial bank and a brokerage company with a cumulative user base over 1 million users. Both services will be operational in Q1 2021, after which we'll start generating revenue from each user transaction carried out through our service. The current market of active blockchain wallet users steadily grows at 30% annually, with the potential to give our retail wallet a total accessible market in fees and charges of $2 billion. As the banking policies progress around the world, traditional players are entering the space and need a simple and easy to integrate technical solutions accessible for wider audiences. Just in Germany, about 40 banks are willing to give their clients access to crypto. Our B2B solution is expected to have a total accessible market of 4.7 billion in transaction and exchange fees. The competition is generally divided between the custodial and non-custodial options, with other approaches like multi-sig or smart contract wallets trying to solve a similar problem. Our team includes certified IT and cybersecurity professionals and blockchain experts. Our CTO and co-founder is the first technician who implemented SMPC technology into a cryptocurrency wallet back to 2017. 14 people are working on this project full-time. Our co-founders have over 3 years of experience in building successful companies in technology and marketing fields. After our white label products are launched, they will be expected to bring in a cumulative active user base of 10,000 in the first 2 quarters of activity, which will bring in monthly white label revenue of 10,000 from transaction fees. By the end of the first quarter of 2022, we'll reach a monthly revenue of around 75,000 with 4 onboarded white label clients. To speed up the onboarding process of 2 white label integrations, we would need additional funding of 250,000. These funds will be used on hiring additional developers, operational costs, and other additional security audits. Thank you very much.
All right, Jerry, thank you very much for this. So I believe Steven of Absolute Collateral was able to fix the audio problems on his end. So
yes. Can everyone hear me? Can you all hear me okay?
Hi, Steven. Yes, we can. Yeah.
Perfect. Thank you. I appreciate everyone's time. I've gone for the live presentation field. So I've done picture on picture. I've just pre-recorded it half an hour before the session to give it a bit more dynamic. And I'd love to share this with you. So thank you. Hi, I'm Steve Griffiths, the CEO and founder of Absolute Collateral, an online marketplace for collateral trading. We like to think of ourselves as the Amazon of investment banking. We are part of 2 boot camps, one in Bahrain and one in Dubai, having already received $50,000 in initial strategic investments. So I know some people aren't bankers, and that's okay. I'll give an analogy. Amazon started off selling books. They realized books had the most titles than any other category. But a physical bookstore could only hold 150,000 books. But globally, there were 3 million books in active print at any one time. Amazon saw the need of having an online bookstore with universal access. That's what Absolute Collateral is doing. An online collateral trading platform with universal collateral access. So let's set the scene. Banks have to show that they're stable and reliable. The way they do this is through the holding of collateral, in the form of government bonds, equities, or cash. It's just another word for security or an asset. The problem is all trading goes via the banks, such as with other institutional clients, such as asset managers, pension funds, and corporates. Regulation is increased, meaning banks are becoming really selective in who and how they trade with the other clients. So instead of adding liquidity, they act as a bottleneck, which just isn't really great. And trading is mainly via phone and email too. The impact is fundamental. We rely on these financial institutions. What affects them affects us and the economy as a whole. So the people who are trading our platform are the traders, a treasury person in any institution in the world, and global portfolio managers. It's their sole job to generate returns and access cash with the use of their collateral. And it's the main mechanism of accessing short-term cash. And so the amount of cash and collateral a company has determines how successful they are and determines their ability to generate profits. So our USP is our solution. We're a trading platform, a collateral marketplace. We give this greater access, so you can access people willing to trade and in more types of collateral. We provide this direct access that the market just can't do to help reduce this bottleneck, and we provide greater liquidity. We pull assets together and we help with standardization in terms of documentation, all in one place. That is open, transparent, and reliable. And the aim is to benefit the banks, the financial institutions, and the economy as a whole by getting the movement of collateral work. So let's look at our demo. You log into the platform, you then search for the collateral that you want. Once you highlight it, it brings up all the buys and the sells. You then find the trade that you like. You just check the details to make sure it's fine. You confirm the trade, and once it's executed, you go to your orders tab where you can see all your existing orders, and then you can just download the Excel file that you can use for your own internal purposes. Let's look at our team. I've worked with my team since 2009. We've worked at other successful trading platforms and collateral platforms at some of the biggest investment banks in the world and corporates. So our competitor summary. We have indirect competitors in the form of a custodian. This is where you actually hold the assets, but you only have access to those assets. There is some direct competition in the forms of bank platforms and brokers, but they only let bankers trade on that platform. Allowing trading with the whole market would ruin their business model. So we stand out really easily. We're open to all types of clients, all types of collateral, and all types of custodians. The accessible market in the Middle East is 1.2 trillion, and within Europe and within MEA, it's 7.8 trillion. We're planning on launching Middle East first, then Europe next quarter, and then the US the following year. Our sales strategy is direct. I have a 10 years investment banking experience, and so I can piece together the whole market and see how all clients can interact. Indirectly, I speak with collateral associations and custodians where people hold their collateral. So I have a wide collateral base. Market timing is really good because collateral used to sit off the trading floor in the back office where no one really worried about it. It then came to the middle office where people are thinking, what's happening with my collateral? Now it sits in the front office where people have to understand how much money they're generating from it. I'm starting in Bahrain and the UAE because the Middle East has some of the most important sovereign wealth funds in the world, which means there's an international flavor here. So I had a roundtable at the start of the year with 10 Bahrain banks, and a number of them are in the process of signing up our agreement. And I have a number of mentors at the Central Bank, the Banking Association, and EBD that really helps. So I'm based in the UAE. I'm connecting Bahrain to the UAE, then to the rest of the Middle East, and then connecting everyone globally. So our business model is threefold. We charge an annual membership fee for joining the platform. We charge transactions fee per user per trade. And then all the information on the platform can be packaged as data that can be used for pricing and referencing. Our platform is live, we are fully regulated, and we're good to go. We're seeking 300,000 initial investment for 12 months that will be used for regulatory cost, IT build, and for cost of skills. What we're planning to do with this money is onboard 20 clients, have 300 trades, and have international trading, local collateral and international collateral in 2 different regions. And we'd love to be a part of your portfolio. And yes, thank you for your time.
Thank you for your time. I hope that was helpful. And that was me. Thank you.
Steve, thank you very much. We'll now move on to Trilo. Hamish, over to you.
Cool. Hey guys. There we go. Hey guys, I'm Hamish, the founder and CEO of Trillo. We've recently built and just launched a whole new payments network in the last month. The reason that we started building Trillo was that for years, our previous business was obliterated by the high payment fees and slow processing times that you get with cards. I was losing at one point about 68% of our margin just gone like that. And I just didn't understand why it was so expensive there for those businesses. I then went out to the US in 2018 and I was working with a startup on the West Coast. And out there, I had several fraud attempts on my card in the first month. I realized, okay, why is it so painful? Why is it so painful? Why is it so expensive for businesses and risky for consumers? I then came back to the UK in 2019 and stumbled across open banking and realized that with this we have the opportunity to build something so different, so game-changing that gives merchants and their customers the ability to unlock so much that is currently locked up. And that for the businesses, for the merchants, because we don't have any middlemen in there, they get their money in minutes. But also because we don't have those middlemen there, we can do something completely different. We can scrap transaction fees entirely so that no business, no matter their size, ever has to pay a single penny of what they earn ever again in those fees. And instead we bring in a very simple subscription, which is based off of 20p per active customer per month. Now, that's all great, but there's an issue there because for us, we've got these. We like them, we know them, and we trust them. And so why would we bother using a pay-by-bank solution? There's no point. And that's why we focused on building the simplest, smoothest, and most rewarding way to pay. That whenever we pay, whenever we shop, you do it in a couple of taps, and that you get a kickback every time. And that boost is there. So for Trillo, you scan a QR code, tap a button, or eventually it will be NFC. You then pop in your email address and password. If you've got an account, you'll have a cookie on the device, so you skip straight through. You then select your bank. At no point does a customer need to enter any information whatsoever other than that email. They never need to enter sort code, bank number, card number, or any of that. Then they get to the pay screen, where here you get a quick summary as to what's happening. So this is our alpha, where we've got running at the moment, where we've had 500 consumers sign on in the last month, and we've now got 5 merchants lining up for our beta. This was so that customers could come on, they could fund a tree for a $5, give Trillo a go, and as their boost, as their reward, they could get a t-shirt in the meantime. I'll touch on that in a sec. Then you simply tap pay. That takes you out to the bank app, where you go through biometrics, security, confirm that payment, and it's done. That merchant receives their money in minutes, and you get your boost straight away. And that boost is where it gets really exciting, because we unlock so much potential for these businesses. They can invest it in themselves and grow themselves and invest in their customers to give their customers such a better experience. And in the meantime, also increase their sales, driving that repeat custom and really making it as simple as can be. So yeah, so we launched our alpha back in October. With that, people could come on, they could fund a tree for a $5 and go through. We've been having as much feedback sessions as possible with those guys to just learn everything, that flow that you've just seen. We're overhauling that to really slim that down and make it as simple as possible. We've also been now starting to open up to merchants to start testing the API, get everything going and be able to plug in moving forward. We've now got 4 pilots live with merchants. We've got another 5 on the alpha, and we have now 32 coming on and waiting for us. We are limiting the amount just so that we can handle it and make sure everything's right. Something else that is absolutely awesome about this is because we have that consumer side and the merchant side of the market, where you sign up with Trillo once and you can go and pay down on the high street at the pub. You can pay on your laptop or on an app simply by scanning the QR code and tapping the button. We can learn and see so much data. We can follow consumers and we can learn consumer habits, merchant habits, and market trends before you could even imagine it. Well, not quite imagine it. But also we can give merchants and our partners so much insight into their customer so that they can give their customer an even better experience and in turn drive up their revenue. We're currently launching here in the UK, and then the plan is to launch out through Europe later in Q3 and Q4 next year. In the team currently, we have myself, I'm founder and CEO. Then we have Tobin, who's our CTO. Johannes is our senior engineer. Usman is our head of compliance and legal. And then Sam is supporting us on growth. We're currently raising a £1 million round. We've just had literally yesterday well, no, 2 days ago, Monday, we had 850 come through from a number of our angels from our first round following on. So we raised 300,000 at the start of COVID, and a number of those are following on, but we've also now had a group of angels in the UK come through as well. We're looking to get this round sorted in the next 2 weeks before the Christmas period kicks in, so we can start deploying it, build on more, bring on more engineers to support Tobin and Johannes, as well as a comms person and a designer around myself and Sam. I think that's me out of time. Anyway, it was great to chat with you guys. We're raising $1 million. I'd love to hear if you've got any thoughts. My email is hamish@trillo.io. Yeah, Younger, I think we can share that later. But anyway, see you.
Thank you, Hamish. Thank you very much for the presentation. And also, I believe that Gaby Emil of Sennen is back online now. So Gaby, over to you. So you can continue the presentation.
Hi everyone, second time round, gonna give it another go. My name's Gaby Amiel, I'm the CEO of Senon, and I'm really pleased to share with you some information about the business and invite you to participate in our growth. As I mentioned before, Senon is a tech business focused on renewables and clean energy infrastructure assets. So we are an asset management platform for renewable energy operators and investors. Our product consists of high performance dashboards, real-time data integrations, and bespoke tools covering all aspects of our clients' activities. For energy projects, renewable energy projects in particular, are accompanied by huge amounts of data, which presents a big challenge for operators in that sector. So we're talking about monitoring of these assets, whether it's the performance of the equipment or performance of the grid or weather and site conditions. But we're also talking about planning, logistics information. So we've got hundreds of technicians visiting hundreds of site locations. Sometimes these locations may be offshore, providing additional complexity. Then we've got technical, financial and ESG metrics which are being calculated or need to be calculated, and equipment status, registry condition, contractual information, health and safety information, and it goes on and on and on. So Senon actually does away with a lot of huge amounts of extraneous communications and data processing, and provides data through a single central platform. And by doing so, we create big efficiencies for our clients. And we've measured those at something like 30%, but in reality, they're probably much more in the sort of hard to measure areas. And the number one goal for our clients is to reduce downtime, because downtime is the biggest loss that the number one loss that they have in terms of their assets, because it's an interruption to the revenue flow essentially. And Senon allows them to use their resources more effectively to minimize downtime. And the other big area, of course, is health and safety, which is very important for the sector. There are very complex health and safety regulations and processes, and Senon actually automates those processes to keep people safe and to minimize or to save time in doing so. So Senon is currently deployed on over 3.5 gigawatts of renewable energy, which is equivalent to 8% of the UK installed capacity. So we've got some big clients, including London Array, which until recently was the largest offshore wind farm in the world, and Foresight Group, which is a major renewable energy investor. We've been working with London Array for 3 years. When we started working for them, they had maybe 4 or 5 different software systems in place and countless spreadsheets on top of that. Now, Senon runs the whole operation from beginning to end, from the technicians right up to the CEO. And it's a very similar story to on Foresight, except they've got hundreds of assets spread all around the world of different types and sizes. The founding team at Senon is myself and Paul Grimshaw. Together, we've got over 30 years experience in the renewable energy industry. And and another 30 with our chair of the board, Colin. As you can see, our team size is now 12, mostly software engineers and renewable energy systems engineers, and the team has grown rapidly this year. So what we're actually talking about is the renewable energy market, and we obviously, as you will know, it's a very big market and it's growing very quickly as well, and set to be triple by 2030. Our revenue model is to grow recurring license fees. We also have sort of once-off fees for system onboarding, data integrations, and support. And our pricing reflects the fact that the system is modular, but essentially there are three categories or groups of modules which are typically sold together with some guideline prices there that you can see. So versus the competition, I think just to point out that there are a lot of software providers working in the renewable energy space, but Senon really stands out because of its comprehensive and customizable features. It's competitively priced, and more importantly, it's simple, modular, and easy to start with. So our clients are big organizations. They're typically growing rapidly, and that gives us a certain amount of natural growth. I mean, our business is very sticky. Our churn is currently 0, and we see an opportunity for something like 50% of the growth that we're forecasting just to come organically. And the other really important point is that we are being brought into new sectors by our existing clients already. And that is expanding our total available market very quickly as we move into other sectors and areas of infrastructure. We're currently at 600K annual revenues. We've got 6 customers, and we are looking by 2025 to grow that to 15 million annual revenues. We're looking to raise 1 million at the moment, and that is to deliver on contracts which are in our sales pipeline. We've got a number of trial systems on some very large offshore wind farms off the coast of Scotland and France, and we need to do some more product development to bring those on board. We need to beef up our tech support and customer success capability, and we need to expand our marketing and BD internationally so that we can reach new clients in new areas of the globe. Thanks very much for your attention. Really enjoyed presenting today. Apologies for the interruption last time.
Jangir, you're muted.
Gabby, thank you very much. So this concludes our presentations for tonight. On behalf of Chicago booth, I would like to thank all the entrepreneurs for pitching the startups today. In a few days, we will follow up with audience members with a survey to collect interest in pitches and to facilitate introductions to teams. Furthermore, we plan to hold our next event in early 2021. Hopefully, this will be both on the physical premises as well as online. And one more time, I would like to thank Professor Deutsch for presenting her research tonight, which was very insightful and very interesting. Yes, so thank you everybody for attending, and we look forward to seeing you again.
Thank you.